So the topic for today that I wanted to discuss was trend lines. There's a lot of questions around how do I enter a trade, how do I exit a trade. If I'm not in a trade, I'm in this FOMO mode where I don't know where to really enter into the trade and things like that. So for that purpose, I think trend lines will really help you in the long run too. Like I personally use trend lines and support and resistance levels to assess how to trade, right? If you see, I have those horizontal levels that I draw where I say, okay, you know what, this level breaks, we go to this level next, and things like that. I keep talking about price targets based off the level breaks, and once the level breaks, I keep upgrading the price target. So we usually go level to level trader, right? We are always a level to level trader. We don't say, okay, S&P 500 is trading at 487. It can go down to 400. That's not how we talk at all, right? So at least that's not how I talk, because there's a lot of supports that need to be broken for me to give that price target altogether. So that those are support and resistance levels. I'll go over those, how I draw them and things like that. It can be done in like about a 15-minute demo, so I'll need a full 45 minutes to an hour to do that, because I kind of go over different time frames from weekly, daily, 65, 15, and then I start drawing support and resistance levels on that, and then start removing the support and resistance levels based on no intersection of these, or overlap of these levels on different time frames. I don't see that. I just keep removing those levels because they're not as significant anymore. So that's how I kind of, just to give you a short overview of how I kind of draw it, because you will see them on my charts. I'm just going over that, and I use trend lines quite a bit. Trend lines are one of my primary technical analysis tools, which help me to understand where there are breakouts, where there are retests happening, what is the complete trend in the market per se, and things like that, right? So that is essentially what trend lines are for. But before I get into these trend lines, I would want to clarify about 2 to 3 points that are, first one, trend lines, you want to use them based of the time frame of your trade, right? For example, I kind of draw trend lines for you every day, right? Like I show you 15-minute charts, I show you 5-minute charts. Basically, I trade off 5 minutes and 15 minutes. And then if you look at my daily analysis or daily recaps or trade ideas that I post, they're mostly based off the daily time frame, right? And then you have and the weekly time frame analysis, where I kind of tell you where and what to expect of a particular trend line. Like for example, the Tesla analysis that we did, every single time we were hitting the trend line, we were seeing about 30 to 40% correction on Tesla stock, and that's essentially what happened again, right? Like when it was trading at around 245, that's when we were like, okay, you know what, there's a 30%, 40% correction that happens off this trend line, so we'll probably sell some cash secured puts. If we had shares, I would say covered calls, but I don't own shares on Tesla. But anyway, that's why we sold cash secured puts on Tesla for a correction of about 35 to 40%. If it does come there, we'll buy the shares. Otherwise, we'll just sit out and enjoy the gains that on the CSPs that we sold. So like the things like these, the longer the time frame, it is more for a swing kind of scenario. The shorter the time frame, it's more of okay, I'm going to hold this particular trade for the next 30, 60, 70, 60, 90 minutes, and probably exit out. Then I usually go to the lower time frames, where I'm charting out trend lines for you on the 5-minute and the 15-minute. Another thing that you want to understand is the trend lines tend to change quite a bit on your lower time frame. So for example, if I'm drawing a trend line on a 5-minute chart, it can, in the next 30 minutes, you can see a different trend, and you might want to be flexible to draw a new trend line to understand the trend for the next few minutes or the next couple of hours, maybe, right? The lower the time frame, the faster you want to adapt yourself. But higher the trend line, you want to use that trend line for breaking, for understanding the momentum or understanding retest, to understand the trend of the overall market or the overall sector or the overall stock itself, and try to position yourself. So just a couple of points that you want to understand before I dive in. And another thing that I kind of see in a lot of charts, like posted by quite a few traders, which kind of irritates me quite a bit, is they have like hundreds of trend lines. They draw a trend line like that, then they have a trend line like something like like that, and then they have some other trend line like oh, there's another one like here, this is another trend line, and then they have another trend line which looks like that, and then they have another trend line which looks like maybe like that, and they're like, okay, when I look at that chart, I'm like, what the hell am I looking at, right? Like I really don't know what I'm looking at, and it kind of bothers me quite a bit. I'm one of those people who I think I have an OCD when it comes to charting, where I don't see good charts. I just turn it off. So I like, they have to be clean. They have to be like very clean to understand what's happening. Just give me a blank chart. That's good enough for me in a way, because price and volume are the key aspects of a chart that we always use for trading. Trend lines and support and resistance levels are just assistant tools for you to understand what's happening in the market, just by like doing some homework. So but anyway, so firstly, how do you want to draw a trend line, right? Like let's go with SPY on the weekly time frame. I want to give you an overview as to how you want to like really look for a trend line. So firstly, when you look for drawing trend lines, the bigger the time frame, like weekly charts, monthly charts, they are the ones that you want to look for when you're looking for swing trades, right? Like let's say a couple of quarters out, or a year out, or looking for leaps or things like that. That is essentially where you want to chart your trend lines, right? Like you want to, like for example, this is the weekly chart on SPY. What you want to look for when you're drawing a trend line is you want to see points of significant reversals or bounces. In the sense, if you see what do you see in this chart, where do you see significant reversals and bounces, right? Like the first one, like if you see, this is one place where I got a reversal, right? Like this is one place I got a reversal, I got a reversal, I got a reversal, I got a reversal, right? Like this is where I got another one here, another one here, another one here. So these are places that are more significant in a sense, like where you can clearly see a reversal and say, okay, you know what, that's where the market really turned. And those are the points you want to join together, right? Like you want to draw a straight line where you want to get maximum number of those points into your trend line, so that you understand what's the overall trend of the market. So for example, in 2022, after we broke out, we were talking about measured moves and things like that. I won't get into that per se. I have a beautiful thread on it. But then if you can clearly, you can cleanly draw a nice little trend line like that, right? Like if you see. So one thing that before I go into the details about drawing this trend line, one thing I kind of hate about drawing a trend line, and I see quite a bit happen also, is I don't like, you either use the ticks, right? Like you use like the wicks, like these, like WICKS, like you use those, or you use the bodies. Like whatever you do, try to do it as consistently as possible. Don't try to like do like the wicks here, and then oh, you know what, I'll do that's a much better trend line. Don't do that, right? Like you see how many times I'm like crossing over these bodies of these candles. You don't want to do that. You essentially want to keep it at I technically do it at wicks, right? Like I just feel there is a lot of price action that can be caught on those wicks intraday moves also, right? So because they have volume, and if you're doing something on the daily and the lower time frames, I generally, or I wouldn't say generally, I'm always removing the pre-market data per se, because price and volume are the two very important things that I use for my analysis. So pre-market, you don't have as much volume. Yes, there is price fluctuation, but there's not much volume. So when there is not much volume, I'm not going to take that price into consideration. I just feel it's fake, right? So that is essentially what I that those are certain things that I kind of follow when I'm going after lower time frames as well. But here, if you see, this was the trend in 2022, right? So this 2022 January, yeah, this was the trend. We were seriously in a very nice clean downtrend back then, and once we broke out, see, like these are where you can use trend lines very, very effectively, right? Like we had a every time we hit that trend line, we had a nice little correction, and like you could have scaled out, scaled down, sold covered calls, or sold some of your long positions or things like that. But then once you broke out, you would have easily taken a long position, right? Like these are what momentum traders kind of do. Like once you broke out, I still remember when we went long here, and the most long that we went was here. I'll talk about that later. But then once you see that, momentum traders get in, and more often than not, when you see such a strong trend line break, right? Like this is a weekly time frame. If you see a strong trend line break like this, you usually see a retest of the trend line as support. It has to say, okay, I'm a trend line which was broken. Go ahead and test me again. I won't break down this time, right? So that is essentially why a trend line is so important. So on this retest is where you can probably average down and have some stops ready and say, what, the trend line really did not work, or things like that. And this position here, I would say, is one of the most most successful traders try to enter positions there, like the spot that I just showed you, because like it is a retest of a very strong trend line which was acting as resistance, and once broken, it starts acting as support, right? So that is where you want to go long for. And then like you could have easily ridden you could have easily ride the wave there. So that's essentially why you would want to use some trend lines, and why you want to draw some trend lines and understand what's the complete picture of the market that's happening. I can give you a very small little example here on I was looking at Adobe when I was doing some analysis this morning. This is a very interesting one too. If you see, the other day, I think I posted this on Twitter as well. You can go over Discord channels also. You'll see this. This is a very nice example too, right? Like this was the peekaboo setup that I talked about. The next day it went higher, but then after that it went lower, and now see where exactly it retested, right? It retested that trend line which was broken as support, and then it just shot up towards our price target at 627, right? So these are certain examples that I can give you, like, and try to keep it very short and sweet, right? Like don't try to go over multiple setups that are there and say, oh, you know what, there is this trend line here, there's this trend line there, there's this trend line there, and then you're like totally confused, and they're like, okay, I just don't know what's happening here, right? So all you need to do is understand where there are significant reversals on the day, right? Like this is a good reversal point. Like if you would have said, okay, you know what, this, I'm going to use this point as a reference for a particular trend line. Oh yeah, go ahead, right? Like I mean, is it relevant right now? I'm not sure, but like, let me draw it, right? Like I want to use this, right? Like let's use that, right? So all these are points where we had nice little reversals. So if Adobe was going to fall off, right? I mean, like this trend line, I would go long on this trend line if it really did come down to that point this year, right? So this is another trend line that I would say very potent, very, very nice trend line, which was acting as as support, and where would my stop loss be once this trend line breaks on the daily. Like this is a daily time frame, right? So on the daily, if this trend line broke and we have a close under that on a daily time frame, I would be more cautious and say, okay, you know what, I'm going to see it one more day and I'm going to get out, right? Because or like just like what we talked about on the weekly analysis on SPY, where we were talking about trend line, maybe it breaks down and then we have a dead cat bounce to retest this trend line. That is where you would want to get out, because now it has been a significant support before, and once it breaks down, we'll have a significant resistance there, right? The support now turns resistance, and now that's the area that you want to get out at, right? So that's how you want to trade. That's how you want to use trend lines to your advantage. And then you might also ask me, like, okay, you know what, trend lines are so good, why are you not just using trend lines? The best setups that I have played, or more confident setups that I have played, like if you all remember last week we played Amazon, right? Like everybody was asking me out of nowhere, why are you interested in Amazon? Market was rallying, Google was up, Microsoft was up, Amazon was in red. And when I looked at Amazon, it was at 154. Like 154 is where we have the trend line support, and also we had the level. Like when the trend line support and the level are coinciding, that's where I'm like, okay, you know what, this is where we can have a very low risk and a higher reward kind of scenario, because the complete market is kind of bullish, and most of the tech sector is, like the cloud sector was running, and maybe Amazon will go, and being that at support, I have a very minimal risk. Once it kind of loses 154, I'm good to go. Like I can cut off my stop loss at around 30-35%. I'm pretty good. So that is the mindset that I kind of go after. And when a trend line and a support resistance level always coincide at the same point, I'm usually very excited about that trade. Like I'm more looking forward to such high confidence trades than looking for a random trade that might happen, and it can work out, right? So this is something that you want to look for. And okay, let me go back to SPY, and we can talk about a little bit more about a particular level. Like I just talked about levels of confidence, right? So if you see support resistance levels, right? Like if you something that you can see here is market did take quite a bit of time to break that 477.50, right? Like how do I know that? We went up, took some time, went right back down, went right back up, took some time, went right back down, and then finally it broke out, right? So this has been a couple of touches before it kind of broke out kind of level. So yes, like when the market comes down, 477.50 will act as a strong support, right? Like it acted as a resistance here. Once it broke out, now it's a strong support. So when someone says, what, SPY is going down to 450, or it's going to 440, or it's going to 300, whatever that is, I say, okay, let it break 477.50 first, right? You see why I'm talking about 477.50, right? Like it's a confluence zone of multiple multiple things, where you have a trend line that has not been broken, and has been a strong support, and then you also have the support resistance level right there, and it is a layer of multiple confluences. And if you go back onto probably onto the 65-minute chart, where we are also looking into bull gaps and bear gaps. On the daily, maybe we can't see that, but I think there will be, okay, there you go, there's a bull gap right there, right? So there are so many multiple confluences right there, and until and unless that is broken, I can't really even say we are going down to 460, right? So that is something that you want to understand, and use these trend lines to your advantage. And on this hammer candle here, if you were saying, okay, you know what, we are going to 477 and going down, I wouldn't really agree to it, because we have another trend line that is somewhere up there. Like you can't really say where we are going to stop here, and until and unless there's a clean real reversal that can happen here, this is not like really a potent trend line. But then until and unless, like, we have a clear reversal, I wouldn't really call that, calling a top there or anything like that. It's just a trend line there, and I know it's not broken yet. It's not, and if it does have a reversal right here and goes back to the lower trend line, that's when you want to keep an eye out for that, right? Because if we see a bounce right of 477.50, where exactly would we go back up again to this particular trend line here? So I'm getting ready there, right? Like, this is not a real potent trend line, but it is valid though, like, right? Like, I'm still on a lookout to understand where the next trend line is, or where the next trend is going to be. But this is a very potent trend line, because you can see there was a nice little bounce, came right, a nice consolidation, again bounce, came down, nice reversal, came down, nice reversal again. So this is a very, very important trend line that needs to be broken by the bears to really push the price down to 470 or 460 for that matter, right? So that is essentially where I kind of use trend lines and how I kind of draw trend lines. I hope this kind of helps. If there are more questions, I'll definitely try to answer them in our chat. Like, I'll go like, I have plans for multiple sessions like these, on a bigger scale, like, 30-minute sessions, and we'll go over Zoom interactive sessions, and we'll talk more, and with a selective smaller group, and like, we talk more in private, like, kind of thing. So but I hope this is helpful, and that is where I kind of like using trend lines and support resistance levels. These are the levels that I tend to, like, trade the momentum off, trade the trend off, and try to swing if possible, and things like that. So